Thank you. I would like to extend my heartfelt welcome to all of you for having taken out time today to deliberate and have this panel discussion. My warm regards and heartfelt gratitude to the board members and flag bearers of Bharat Chamber of Commerce, starting with Dr. N.G. Ketan, and to our special guest in chief, Shri Shravan Kumar sir, to Surana ji, to Sandeep Churaria ji, to Naresh Pachisia ji, to Vikash Parekh ji, my fellow speaker. So we would be briefly going through few points which I would be talking about from the perspective of GST proposals which have been proposed, GST amendments which have been proposed in the Union Budget 2025, and few points will be covered by Vikash Parekh ji. So let us see. These are the summary of the points which have mostly been already discussed in the 55th GST Council meeting, which was held on the 21st of December. And these have been again amended. These have been put forward in the Union Budget as well. So per se, there have been nothing new which has been mentioned in the Union Budget. This is just an extension of what was announced or proposed in the 55th GST Council meeting on 21st of December. Now, the Finance Bill 2025, we would see the section 116 to section 129 of the Finance Bill 2025. These pertain to GST. Okay, so we are focusing on these, both of us. Now, you may ask that, sir, when would these be notified? These are not notified yet. So it has been mentioned, even though when it becomes a Finance Act also, there may be different dates wherein by notifications or circulars that these sections of the Finance Bill may be notified. So 116 to 129. Now, let us begin with the first point, which is the reduction of tax liability on outward supply when a credit note is issued. So we already know, this has been announced in the 55th GST Council meeting, that now if a credit note is issued by a vendor, by a supplier, so that needs to be the input tax credit consequent to that, which the recipient has purchased earlier. For example, let us see this example. Now, a purchase has been made by Mr. B of 1 lakh rupees. He has paid 18,000 to Mr. A. Mr. A is the vendor. He has deposited 18,000 to the government. Okay. He has filed his GSTR1, everything. Now, he has issued a credit note. Now, credit note is of 20,000 rupees. So, 3,600 rupees he is going to downward adjust his tax liability. Earlier, he paid to the government 20,000. Now, he will only pay remaining. He will pay what? 3,600 he will adjust, and net amount will be 14,400. So he is taking the benefit of downward tax adjustment against the credit note issued of 3,600. But now the government has made it going to legalize this, and it is going to be amended in section 34(2), the credit note section, that only if the recipient has reversed his input tax credit, which is pertaining to the credit note issued by the supplier, which is of 3,600. If he has reversed it, then only the supplier gets the benefit of downward adjusting his tax liability in his GSTR 3B. Now, this has already been incorporated in the invoice management system. As we would be aware, this is a 3-month-old invoice management system, wherein, see, I will just show you few screenshots of invoice. See, this is the invoice management system. These are the credit notes which come to the recipient's dashboard. Now, if you see, there is no pending option. So, for example, this credit note which comes of 3,600 rupees, to me, the purchaser, I have to either accept it or reject it. I say that, sir, I don't recognize this credit note, I am going to reject this. If I press reject, and what will happen? My GSTR 2B I recompute. So in my GSTR 2B, I will not have to reverse that 3,600 from my input tax credit, but the consequent action on the supplier will be the next month's GSTR 3B return of the supplier, his table 3.1a, where he declares the output tax, that 3,600 will be increased because he has already adjusted 3,600 rupees of tax this month, but the recipient has rejected that. So he will have to pay the next month 3,600 rupees. So he is not going to get that benefit. Earlier, this was nowhere there mentioned in the law. Now, this is being proposed to be amended in section 34 subsection 2, and new rule will also come out, that is rule 67B, as in how to reverse and how to manage this. So this has become very important. So now basically the supplier is at the mercy of the recipient. Usually we keep hearing the recipient is at the mercy of the supplier, know your supplier. Now this is the other way around for this. Now, for example, I took this example. Now, these are the, for 8,858, 210 rupees, these are rejected by the recipient. These are credit notes. These are auto-populated in the supplier's GSTR 3B for the next month. In table 3.1a, he'll have to pay tax because last month he adjusted, next month he'll have to pay. Now, if we see, this is an extract of a GST notice, wherein usually what we have seen is that when an ASMT 10 comes or DRC 01, a show cause notice comes, or an intimation also, DRC 01A, the department usually takes the entire input tax credit reversible from GSTR 2A or 2B, the entire amount for the entire year of credit note, and they say that we don't have any record or breakup in 3B. You please explain that how much you've reversed, how much you've not reversed. So this entire amount, for example, in this notice of 2,90,000, 2,90,000 and 7,000, this is the entire input tax credit reversible against credit notes appearing in my GSTR 2A or 2B. Now I have to respond. Now if I am unable to respond, or if I am unable to explain to them that, sir, I did not claim the input only, so why will I reverse? So in those cases, many a times that the particular recipient or the taxpayer, even though he has not claimed the input, he has not reversed, he does not need to reverse, but he will have to pay this particular amount. Now what is happening is, when you recompute your GSTR 2B, you select 5 credit notes, you reject 5 credit notes. So you have 5 debit notes in your tally system, so you're only going to accept those. So this hassle will be very much resolved. So it's a very good initiative. These few points will be covered by Vikas ji, the penalty and stuff. Okay, now ISD. So we must be aware that there is something called as an input service distributor. Now what is an input service distributor? Let us take an example. In Maharashtra, I have my HO, head office. Now my head office is a wholly owned subsidiary of a foreign company. Now my foreign company, this company gives me some technological software, so I have to pay royalty. If I am paying royalty, if I am importing technological software, it's import of services. If it's import of services, that is notification 10/2017 IGST rate, we have to pay RCM. That is, the head office has to pay reverse charge mechanism on the import of services. Now what happens is, this head office does not have any sale, but he has 10 different registrations all over India across 10 different states. So these are 10 distinct entities in Bihar, in West Bengal, etc. Now 10 crores of money which I pay on the royalty, 1 crore 80 lakh rupees I pay to the government, 18% for instance, your RCM. Where will I utilize it? So I have to spread it across to 10-15 different states of my own registrations. Earlier what used to happen, the RCM input was not covered. So in the July budget, RCM input, to make it more attractive, ISD, to make ISD registrations, input service distributor, more attractive, what they did, they included intrastate RCM input, but they had not included the interstate RCM, IGST inputs. So now what, in this budget, they have expanded the scope to make ISD more attractive over and above cross charge. Cross charge, we know we are cross charging from one unit to the other, but they don't want that. They want ISD to be taken forward. So now under ISD, you can, the HO, he can buy the invoices, and with the mechanism he can pass on the input tax credit on RCM on intrastate transactions, on interstate transactions, and on normal transactions on common input services. You know that, right? So this is an advantage. And minded one more thing. Now the registration of input service distributor has become mandatory from 1st of April 2025. What does this mean? This means that earlier we were doing cross charge. Now cross charge is going to be entirely removed. An input service distributor, only mechanism to go ahead majorly will be passing of credit through ISD registrations. You have to take ISD separate registration, separate, it will be a separate GSTN. PAN will be same. Head office PAN will be the same, state code will be the same, but GSTN will be different, right? So this has become mandatory, the registration also. Now this will be discussed by Vikas ji. Now there is an enabling clause which has been put forward in the section your GSTR 3B section. What does that mean? Now, as we know that IMS is going to become mandatory in a few months. We already know GSTR 1 data, whatever we put in, it auto-populates in our GSTR 3B. Now what the government is doing, they are planning to hard log the figures which are auto-populated in our GSTR 3B sale from our GSTR 1A, and in the input column, table 4, from are GSTR 2B or the IMS. So they are going to hard lock. Hard lock का मतलब क्या हुआ? मतलब you will not be able to make any amendments or changes. It will be grayed out. This has not happened. It was announced earlier. It should happen from January 2025, but there has been a particular update on the GST portal that it will be postponed. So now what will happen, sir? Try to understand where is the legal mandate for this. So they are making this legal mandate. They said, oh, these are all portal updates. Anyone can file a writ, say that where is the legal mandate for this? So what they have done, they have made an amendment in section 39, which is the GSTR 3B section, saying that we are going to file GSTR 3B with certain restrictions and conditions. And they have not specified those, but it is an enabling provision. Now, what are those restrictions? We already know these. GSTR 3B can't be filed if GSTR 1 is not filed. GSTR 3B of previous month is not filed, so it's a sequential filing. Next month, GSTR 3B cannot be filed. Now, we already know this last two budgets earlier. 3-year-old GSTR 3B, 3-year-old GSTR 1, 3-year-old GSTR 99C, they cannot be filed because they are making it time barred. Now, this sequential, all of this. So, hard locking of auto populate. So, this is going to happen in the next 6 months. So, they are planning it and making it a legal mandate now only, that we are enabling that certain conditions will be there while filing GSTR 3B. Okay, now for warehoused goods. Now we already know Schedule 3. What is Schedule 3? That is those transactions on which GST is not charged. In respect to which that there is no supply, it will not be considered a supply of goods or supply of services. So a new amendment has been put in here wherein they say that, sir, what is an SEZ? It's a deemed foreign territory inside India for the purpose of tariffs, duties, etc. We know that. Same way, your free trade warehousing zone, that is also a part of SEZ. So now what they have said is that, sir, if you are selling, if you are transferring your title of goods from one SEZ to the other or from within one SEZ, and if it is warehoused in an SEZ, there is no problem. You don't need to pay GST on that. What does that mean? If in one SEZ, I have certain goods in a warehouse, right? Like the way custom bonded warehouse it is. So we already know if it's in custom bonded warehouse, before we file bill of entry for home consumption or shipping bill for export, if I am going to transfer the title, no GST. Just the way high C sales are there. Same way, if in a warehouse in an SEZ or in a free trade warehousing zone, if the transaction happens, if I sell it while it is warehoused, where it is custom bonded warehouse there, so no GST will be there. So this is a particular benefit which has been given to us. Now, we already know that the vouchers, like for example, pantaloon vouchers or any vouchers. So, vouchers, when we purchase vouchers, we pay money. So, it will be considered as already prepaid or actionable claim. So, this has already been clarified by Circular 243 that you don't need to pay GST when you are purchasing voucher. When you are purchasing the underlying goods and services, then you have to pay GST. So, this has already been clarified. So, an amendment has been made to remove the time of supply provisions. When the main provision is only not there of voucher taxability, so there is no point of having the time of supply, place of supply provision. So that has been deleted. Customs 1-2 points I just want to mention, before I hand it over to Vikas ji. The one point in customs, which is a beneficial point, is that now there has been a clear-cut time which has been mentioned, which has been provided of 2 years for provisional assessments. Earlier there was no time limit. It would go on for years. Now for pending cases, it will be 2 years from the date of the Finance Act. So that is one benefit which has been provided. Second benefit is that in case while filing my bill of entry, while making payment in cash challan or whatever there, IGST, I made extra payment of BCD or ISD. Now earlier there was only one provision, that was of amendment. Now revision of entries, bill of entries have also been provided. So now I can amend I can revise my bill of entry and I can apply for a refund of extra payment of tax within 1 year. I can do that. So that benefit has also been provided. More or less these were the briefings. After the session is over, during the interaction session, we would encourage everyone to ask questions, whichever, even if it's not related to the budget, we would like to. And I would like to pass the mic to Vikas ji to continue the session. Thank you.